The UK budget will be delivered on Wednesday the 22nd of November. The Chancellor, Philip Hammond, will want to avoid his last political disaster around national insurance contributions, but at the same time may find that his room for manoeuvre is restricted. Will it be a budget that'll move the markets? Well, Kallum Pickering is senior UK economist at Berenberg, and he joins us now there from his offices in London. Kallum, first of all, what do you see as the main thrust of this budget?
Well, the main thrust is really related not to the Treasury but to the OBR, and it lies around what the OBR forecasts as the potential growth rate of the UK. The OBR is the external committee which essentially checks and balances the budget for the UK and produces the economic forecasts. Now, because of Brexit, it's widely expected that UK long-term potential growth will fall. I've reduced my potential growth rate from 2.2% to 1.8%. The Bank of England's gone further. They see the UK's potential growth rate at 1.5%. In the last round of forecasts in March, the OBR had a growth rate above 2%, around 2.2%. If the OBR also reduce their potential growth rate to 1.5%, and that forms their forecast for the next few years, that means the Chancellor has got to find either some more taxes from somewhere or reduce its spending promises. This is a pretty difficult budget.
One of the things, of course, talking about tax is the release recently of the Paradise Papers. Labour's been all over this, saying that there should be more of a clampdown. Is that something that Hammond's going to focus on?
It will form part of a collection of policies. I have to be perfectly honest with you. From a macroeconomic point of view, there are few days in the economic calendar for the UK that are less economically significant than the budget. The UK is going through a period of very gradual fiscal consolidation. The tinkering at the edges will have very little impact on economic growth over the next 5 years, and I do not expect the Chancellor to do anything drastic.
One of the things that came out of a report in the Financial Times yesterday was that the Treasury is coming under pressure from Eurosceptics to embrace opportunities, as they call them, outside of the EU. Do you see the arch Brexiteers putting pressure on Hammond to find ways of putting a positive spin on the outcome of the negotiations around Brexit and ultimately life outside the EU?
I mean, I've seen those headlines, but they're completely in contrast to reality. Remember, how can the Chancellor put a positive spin on Brexit when he's not the one that produces the economic forecast? The independent OBR produces the independent forecast for the Chancellor, with which he measures his tax and spending policies against. So maybe the Brexiteers should really be asking the people that produce the forecasts to be a little more optimistic. But when it comes to Chancellor Hammond, yes, it's true. With the right economic policies at home, the UK can do well outside of the EU. There's certainly intelligent life outside of the EU. There's no reason why Brexit has to be a long-run disaster. But on its own, exiting the EU will have a negative effect on potential growth. What the Chancellor should do is act with discipline when it comes to its budget by limiting the tax burdens and excess deficits the Chancellor places on the private sector. This will raise savings and investment and boost potential growth. So the Brexiteers, in a way, have got it right. The Chancellor has within his powers the ability to promote economic growth, but the Chancellor can't be optimistic in his forecasts in the sense that he doesn't produce the forecasts.
One of the things I said at the top is the fact that he doesn't want to repeat the disaster that happened around national insurance contributions last time. VAT registration, this has been another reported area where he could move, potentially creating some extra $2 billion in revenue if he brought the VAT registration down from around 80,000 down to 20,000, which reports suggest will be further in line with the rest of the EU. Is that something you see the Chancellor trying to achieve?
He could possibly do that, but I think about the policy more generally. The Conservatives have cornered themselves when it comes to budgetary matters. They've gone too slowly with fiscal consolidation so far. It's irresponsible for the Chancellor, with 8 years of economic growth behind him and full employment, to be running a fiscal deficit to the order of 3% of GDP. The problem is, any acceleration in fiscal consolidation would probably weaken the economy further and make the Conservatives' chances of winning the next election even lower than they already are. whereas any loosening of the budget to try and stimulate economic growth would de facto be an admission from the Conservatives that the Labour policy of spending more is the right one. So again, expect very few changes apart from some tinkering around the edges, which relate mainly to the OBR's likely lowering of economic growth over the next 5 years.
So what do you see as the outcome of this budget then? We've already been warned about the potential for lower growth from the Bank of England recently. What do you see as the market implications for the budget?
If I were keeping an eye on the budget, I would look at UK housing policy. The Conservatives are absolutely wedded to keeping house prices afloat in the UK. They had already announced a boost to Help to Buy. That's the mortgage subsidy scheme. There's some rumours that they could cut stamp duty. Keep in mind, 2/3 of all wealth in the UK household sector is housing. 75% of all debt is mortgages. Every 4% change in house prices in the UK has a 1% impact on consumption. A nationwide fall in house prices unequivocally leads to a recession in the UK. The slowdown in the housing market since the Brexit vote is the major risk to the economic outlook, and the Conservatives will seek to avoid it. So just as normal, if there's a sector which could do well from the budget, I would put housing at the top of that list.
Sterling, is it already pricing in the worst?
Sterling is pricing it in the worst. I think sterling is undervalued relative to economic fundamentals. I think in the long run, the UK can probably achieve a growth rate of about 1.8% relative to 2.2% inside the EU. That's not the end of the world. It's just a bad economic policy decision. That does not justify the 15% fall in trade-weighted sterling since the Brexit vote. The problem is markets are worried about the hard Brexit risk, which could come in March 2019. The budget won't affect that risk. Until that risk starts to diminish, which will be the product of progress in the Brexit negotiations, markets will continue to worry a lot about the hard Brexit risk, but when they start to discount that likelihood, sterling can start to move up gradually over time.
Okay, Kallum, thanks indeed there for joining us. Kallum Pickering there, ahead of the budget, which is due to be delivered on Wednesday, the 22nd of November. Kallum Pickering was a senior UK economist at Berenberg.